Welcome back to Higher Exchanges, the #1 independent cannabis investing show, where we break down complex cannabis markets into clear insights you can actually use. Here are your hosts, Jesse Redmond and Morgan Paxia.
Welcome back indeed. I'm Jesse Redmond, Chief Strategy and Investor Relations Officer at LEEF Brands, and I'm here once again with a grizzled and wise cannabis investing veteran. His name is Morgan Paxia. Morgan, what's happening, man?
Doing well. Feeling grizzly, but doing well.
Got a clean haircut going on there?
Yeah.
Nice.
Looks good for about, 2 weeks, and then it starts to get a little out of shape, but no, nice, high and tight, San Diego style.
Looking good. Speaking of San Diego style, we have our CEO of LEEF Brands. He is San Diego, specifically La Jolla's, Micah Anderson. Micah, how are you?
I'm good. What's up, guys? How are you?
I'm good. I misled the audience. I thought you were still at the farm today. So can you at least let them know that I was correct? You were at the farm until last night.
Yeah, I was there until I drove back late last night. I was there for a few days, checking in on everything. Everything's looking good.
Nice. Well, we have so much to get into today. We had earnings out yesterday. We'll talk about that. We had the mindset investment a couple of weeks ago. Plenty to talk about there. But Morgan, before we get into the meat of the show, 420 is approaching. And I'm curious, do you have any ideas about how retailers can use some cool software to make the most of it?
I sure do. Thanks to our wonderful guest, Flow Hub. As you mentioned, 420 is coming up fast, and it's the single biggest new customer acquisition day in cannabis retail. Didn't know that. But acquisition without retention is just churn, something we all talk about. Operators who win long-term are the ones who turn 420 first-timers into loyal repeat customers, and that requires a marketing engine connected to retail purchase data from day one. This is the crux of Flow Hub and AIQ. Flow Hub captures the transaction. AIQ converts that customer into a repeat buyer. Getting set up before 420 means every new customer who walks through the door on the industry's biggest day enters a loyalty and re-engagement system automatically. If you are interested in learning more, check out flowhub.com, where they've got this collab. More information is available there, and get ready for 420.
Micah, how do you feel about 420 as a cannabis person? For me, when I ran the dispensary, I always had mixed feelings about it because it was a huge volume day, but a low price day. So it was always a lot of work, a lot of revenue, but margins suffered. Just curious in your, I don't know, man, 25 years of cannabis experience, what your reflections are on 420's past.
I think it's good that we have a holiday.
Yeah.
So it gives us a little moment to celebrate. So I think it's a good thing. Our retail store's always done great on 420. I haven't personally ran it the way that you were running yours, so I don't know it from that side, but no, I think it's good for the industry. We got to have a day, have a moment to celebrate what we're doing.
Yep. Well, let's dig into some LEEF stuff, Micah. You've been on the show. I think this is maybe your third or fourth time. Been out there telling the LEEF story quite a bit, but there's always new people tuning in. Thankfully, Higher Exchanges is a growing platform, so I know we'll have some new people listening today. Can you just give people a little bit of context on who LEEF Brands is, what the company looks like, and maybe a bit of background on how we got to where we are today?
Yeah, sure. So we're a concentrate provider. We provide extracts to many of the largest brands in the industry. We operate and have operated for close to a decade in California. Recently made the move out of California into New York to basically repeat the business model. And we've over the 10 years, we've done it all, I'd say, from retail to we've had a portfolio of brands. We were trimming flower at one point in time, selling flower, and we really distilled down our business into becoming a concentrate provider to other brands in the industry. So we run a large extraction facility up in Northern California, and recently completed, or we're halfway through the completion of running our own farm in Santa Barbara, and with all the material being purposed for extraction. So we grow material, we bring it into our extraction facility, we turn it into different types of concentrated products, and then we sell those products to kind of the who's who of the industry. And So we're one of the largest at what we do in California. And, New York's a new market. We feel like it's going to be good over time. It's going to go through its ups and downs and challenges, but the idea is really to rinse and repeat, keep it very simple, stay focused on what we're doing. And over the 10 years, I'd say that we've learned that like it's hard to do it all. And we've definitely found our lane. We found our niche. We feel like we know what we're good at. And that's what we've been doubling down on recently.
And Micah, you've shared your longer history in cannabis on the show before, so we could go through all the details. But I think context could be helpful about who leadership is. Sometimes you have people that came to cannabis from the investing side, which is a little bit more of a Jason Wild type background. You have some attorneys out there like Charlie at Cresco. You have CPG guys. Remember, we used to have Ayer's CEO David Goubert, who came from the luxury chain side of things. So people come from cannabis from a whole bunch of different places. And Morgan and I often talk about which backgrounds work better than others. I like your background the best, Micah, because you've just been a weed guy your whole life.
Yeah, that's it. I've been a weed guy my whole life. I've been using and selling cannabis since I was a teenager. So 14 years old, I think, was when I grew my first plant. My dad grew a little bit of weed in his backyard. I started selling weed at a very young age. I have a 16-year-old daughter, so it's crazy for me to think back now that I think of her doing what I was doing back then. I'm like, how the hell did that even happen? But it's the truth. It did happen. I surfed professionally a bit when I was a kid. And so through that, I traveled a lot. I was all over the world doing surfing competitions. And over those years, I met a lot of people in cannabis. And a couple of the guys that I met while working on a little island called Tavarua in Fiji were like early day pioneer guys in Mendocino County. And so I was selling cannabis down in San Diego and got to know these guys, and they basically were like, hey, you should come up. There's this law that's going to pass. This is Prop 215 in California. So this would have been 1995. It had either passed or it was right after it passed. And so I went up and checked out Mendocino for the first time. Ended up working for one of these guys and learned how to cultivate. My dad and I bought a couple farms in 1 year. And then we started scaling a Prop 215 kind of nonprofit business. So we ran a bunch of farms in Northern California, Mendocino and Humboldt. We did the old school black market extraction processes, and then we ran retail and delivery services down in San Diego. And we did that for over 20 years, long time. I ran into a snag with law enforcement right before Prop 64 happened, and decided to shift my entire business and my team away from the nonprofit world into the for-profit world under Prop 64. So it was like crash course education and like, how do I get into this kind of real world where there's taxes and rule or different types of rules, I guess. And so for the past 10 years, that's what I've been working on here at LEEF. So long-winded way of answering your question. My background really is in cannabis. I've always been kind of like an entrepreneur. I've had little side businesses that I've started and sold. And, I ran a nursery for a while where we were selling the picks and the shovels to all the cultivators in Mendocino County. And that's it. Surfing, cannabis, that's been my entire life.
And what a journey it's been, Micah. Like, I met you guys in 2023. I started covering you in 24. I joined about a year ago in 25. And people see, these great things going on with the company that we'll talk about with the earnings, the farm expansion. There's so much cool stuff going on now that sometimes, honestly, I feel guilty that I'm just coming here for the fun part to get to tell the story and, and be a part of the strategy. But man, there was so much work, Micah, that went into getting us to where we are now. And one of the really the key asset that's helped turn the company around, along with just, the extraction business. We do have the retail store in Palm Desert. We are in New York. But what's really improved the financials so much has been Salisbury Canyon Ranch. And I'd like you to talk a little bit, Micah, about why you felt like we needed to add cultivation, because I think sometimes people see a huge cannabis farm and they're like, that's kind of the last thing California needs. And also if you could, tell that story about actually how you found the property.
Sure. Yeah. So when you're in an extraction business, I think one of the things that escapes people, or it's hard for them to understand, is how much raw material you need to run an extraction facility as large as ours. Even for us in the beginning, one of the things I failed to mention was like the original founding partners that I brought into the company in the beginning. There are guys like me. They've been in the cannabis industry for a long period of time. Everyone still works for the company. And we thought that like, oh, well, we've been doing cultivation for so long. Let's try this new thing. At the time, liters of oil were going for like $20,000 in California. So we focused on building this extraction facility, and like the amount of material that you need put us in a position to where we had to source from all over the state of California. So vans and inside call centers and building SOPs on how to work with all these different farms. So at one point in time, it was literally like hundreds of farms that we would buy material from. And a few years ago, the writing was kind of on the wall. You could see like in each county that had cultivation licenses, there's less and less reapplication. You know, the application rate was going down and down, meaning like the size of the acreage in California was going down and down and down. People were going out of business. That's what it was. And we, you know, started talking about, we're like, this is going to be bad for us, especially where we're at in Mendocino County. We get these little footprints of 10,000 square feet. It's very small. It's tiny in the grand scheme of things, especially when you're doing extraction. So we started looking outside of the county at other counties to see where there was better regulations that would allow for us to build our own big farm and bring it in-house. Santa Barbara was an area that we were finding ourselves in all the time. A lot of the biggest farms are down in Santa Barbara. So we were sourcing from Santa Barbara, spending millions of dollars a year in Santa Barbara County and bringing it back. I actually tried to work with Mendocino County on trying to get that adjusted. I was unsuccessful in that attempt. And so we made the decision to go basically build our own farm. And it took us like 5 years to get it done. A guy that I'm still friends with today who was helping us on the farm, Todd, was down in Santa Barbara, and he was helping me with introductions. He knew everybody. He had gone through the licensing process and helped farms win these land use permits and business licenses on other projects. And so he started working with us. Him and I spent many hours driving all over Santa Barbara County, looking at different farms. And it was actually Todd that found this pocket listing. It wasn't on the market. And we happened to be in this little town called Cuyama, looking at another project that was out there, and just right place, right time. Over the however many years I've been doing this, I think like 3 or 4 of the properties that I've ended up purchasing in years past have happened the same way, where you're in some small little town having coffee, having a conversation, and someone overhears it and comes up and says, "Hey, I got a buddy down the way that's selling a property." That's kind of how this happened. And so Todd and I ended up over on this farm. We drove about halfway down the farm, and I was like, "Todd, this is it. Like, let's turn it around. We'll figure it out." And it was a total risk on our part, because Santa Barbara had already issued all the licenses that they were going to issue. And our belief was that, yeah, but some of these projects are going to fail. There's going to be licenses that go back into the cap. And when that happens, let's be kind of in pole position to where we can get our project through. And so it happened. And fast forward to where we are today. It's a 180 acre land use permit. I think it's the largest one in Santa Barbara County. We built out 65 of those 180 acres, and are now on pace to complete the rest of the farm this year and into next year as well. We won't do all the acres this year, but over the next couple of years, we will fully build into that 180 acres. And then the one thing I should add, because I think this is important detail for people to understand. One thing that we learned the hard way, when you're procuring material all over the state of California, it's very, very hard to have consistency in your product, to have consistency in avoiding pesticides. Pesticides are a big problem in California, not because of the way that cannabis farmers operate. It's because of the ag use that is in California. Organic in other industries does not mean organic in our industry, especially when you are doing concentrations, which is what we do. So we take a large amount of material, we distill it down into a small amount of material, and everything that was in that large footprint of material gets amplified in these jars. And so it's hard to pass, and that was one of the main drivers, one of the reasons why we felt like we have to find something that is tucked up far away out of these other ag uses and has like its own land barrier thing, so that as wind's blowing around and these pesticides are flying all over the place, it's an insurance policy that we don't have it land onto our crop. And so in the due diligence process of making sure that we would be successful there, one of the things that we did was like we dug up a bunch of soil. We got all the soil tested just to make sure what was in the soil, like all over the field. We grabbed all the natural plants that were on the farm. We did micro extractions and ran it no different than cannabis. So we're blasting it with butane and trying to figure out what's in it. And so it was clean, and we knew that we believed that we could be successful. So this past year, 2025 was our first year. We were successful. All the material was non-detect, which is great. And you can see the impact in our performance this year.
Yeah, I've heard you say, Micah, that about half of the material we test from other farms in California doesn't pass for pesticides when concentrated. That doesn't mean it doesn't pass when it's flower, but as Micah said, when you concentrate it, you concentrate everything. And one of the things that makes Salisbury Canyon Ranch so special, Micah, is the location. I remember when Aaron Edelheit from Mindset came out to visit, that he started to really understand what we meant when he saw that Salisbury Canyon Ranch is surrounded on 3 sides by mountain ranges for Los Padres National Forest. And then on this side, the closest farm is miles away. So when we talk about pesticide contamination in cannabis, usually it's not because the cannabis people are the bad actors. They know what they can spray and what they don't spray. But Mike, if I understand it correctly, it's often the pesticide drift from the blueberry farm that's a mile down the road and the wind's blowing this way, something like that. Or grapes can be another big one too.
Yeah, 100%. That's it. Cannabis operators, they've got their SOPs down. It's not an industry problem. It's an agricultural problem. It's a state issue. And it exists in other states as well. I think California being the breadbasket of the world, essentially, where most of the ag takes place, it's very problematic here in the state.
Yeah. Well, let's get into the results, Morgan. I'll turn it over to you, and we can see what the changes have been. And I think that'll tie nicely to what we were talking about with us starting to process more and more of the Salisbury Canyon Ranch material.
You got it. Yeah. So just for some context before I get into the numbers, Micah, do you know acreage that you had at Salisbury Canyon Ranch in 24 versus 25, and just specifically before jumping into just the fourth quarter?
Yeah, no acreage in 24.
Oh, perfect.
Yeah,
okay.
So 25 was the first operational year under the cannabis licenses.
Yeah. So yeah, that's very helpful, because in the fourth quarter last year, you were LEEF did 8.3 million, which was call it a 39% year-over-year growth. So top line, significant growth. Interestingly, or tying into that, was gross profit came in at 3.8 million, which was basically 190% year-over-year growth, and which resulted in a gross margin expansion from 23.5% to 45.5%.
Yeah.
So meaningful change there. Operating cash flow, one of my favorite metrics, where correct me if I'm wrong, but I would believe that's your most profitable operating cash flow, came in at, I did some rough math, 1.35 million for the fourth quarter, and free cash flow of 1.3 million positive versus a negative 1.6 from the fourth quarter of 24.
Yeah.
So what that means, so, there's, what's that?
Yeah, no, you got it right. That's accurate.
Okay, cool. So for the year, I think this kind of, we'll parse into it a little bit more, but for the year, the total revenue was 34.8 million. So that's an increase of 22% year over year. But second half was 16.7 million, a slight decrease, but gross profit again, 10.5 million, up 36.5 year over year. But the second half gross profit of 6.9 million, which was 94% compared to the first half of 2025. So still 1 year, but a massive change in the year. Obviously, gross margin blended through the year was 30%, but in the second half was 41%. And again, operating cash flow for the year was 1.7 positive in the second half, almost overcoming the first half, which was about a 2 million loss. So it was overall was a negative 337K, call it, in operating cash flow for the year. CapEx, I calculated about 750K for the year. So your free cash flow was a negative 1.1 for the year, compared to a negative 7.3 from 24. And again, just balancing how much second half versus first half. So the first half was negative 2.4, but then became 1.3 million positive in the second half.
Yeah.
So meaningful change by the business model change of turning on Salisbury Canyon Ranch.
Yeah, it's starting to work, and you can see it. You know, we knew that the business model was flawed, and it wasn't going to be an easy fix. We had to figure out a way to fix it and do it in a meaningful way. And because of our size, we couldn't just go buy some small rinky-dink little farm and think that that would like solve the problem. It was a bigger systemic issue. And that's why we had to take the time and spend, you know, the capital and the energy that we did getting this big, you know, mega farm online. Because if we didn't build something as big as or go as large as what we're trying to go, it wasn't going to solve our problem. We go through so much material, you know, even this year and the results that we're looking at, right? We're still purchasing, you know, the majority of our material is still spot purchased or through contractual agreements. So we haven't really even seen the full impact. So the way I like to look at it, or the way I think of it, is that Q4 is the first quarter we've ever had as a company that is an indication of what the business should look like moving forward. And that doesn't mean that we're not going to have a couple quarters. I think that Q1's looking like it's going to be strong. Q2, I think we're definitely going to see a decrease. We're aware of it. We've been planning for it. And then the reason why is because we ran out of material off the farm. And so now we're going back to running the business the way that we used to run it. So fortunately, you know, this latest investment that we have bridges all of that, and it gets us into a position to where we can now scale into the farm in a meaningful enough way to where come 2027, we're no longer having these kind of ebbs and flows. It's like we right size the business, the amount of material that we're purchasing between the farm and a couple like what I would call strategic farming agreements that we have in California. And then we've got a closed loop system now at that time. So we're not out of the woods yet. You know, I'm very proud of the team. I'm excited by the results, but I'm also very much like, okay, you know, we just don't, no patting on the back too hard. Let's just keep our heads down. Let's get the rest of this farm built out and keep going. But no, it's great. You can clearly see that it worked. We took a risk. A lot of people said that we were crazy and probably still think we're crazy, and they're right in some regards, that we shouldn't be building cultivation in California. Why the hell would you build cultivation in California? There's cultivation all over the place. There's so much cultivation that everyone's going out of business. So why the hell would you guys do that? But those people didn't understand like what solved our problem. Like our business model is not flower. It is concentrates, and we need a lot of material, and we need that material to pass. We need it to be clean so we can enter it into the supply chain. So it's a win for us, and it's a win for our clients. It's the other way I look at it. It's like, man, if you're a big brand and you want a reliable, predictable partner on your supply chain needs, you know, that's where we come in, and like we're helpful in that way. So it's great.
Yeah, I remember when Jesse and I talked a lot about this last year, and he was laying this out and educating me about, you know, what this would do and how this would impact the business. And to your point, you know, anyone that's been in California a long time has always been promised, you know, oh, it's this, but by this time it's gonna be great. By this time it's gonna be great.
Yeah.
You know, it was always like this, like it was always within hand's reach, you could never get, but you guys are doing it. And so I give you a lot of credit for doing it, and doing it, to your point, in a part of the market where most people had written it off as like a very challenging part, you know, segment to get into. But a deep understanding of the market dynamics and challenges is what separated it. I mean, you know, I totally can empathize on the issue around sourcing in California is incredibly challenging. It's volatile. It's uncertain with what you're going to get. So I imagine your customers, the brand partners that you guys work with, it must be such a relief for them to understand that they have a reliable source of scale for them to be able to do what they do, right? Because how do they have any consistency in what they're doing if they don't have the support from their other partners to be able to do that? So very impressive to see that coming together. Kudos to Jesse for getting it. And educating an old grizzly man over here about what he's up to. But you guys are a public company, and as you mentioned, you're still in the scaling mode. And fantastic that you were able to secure this capital. And you have this challenge where, like, free cash flow, it was great to show that last year, but now there's going to be some investment that's probably going to impact it. And we have a short attention span theater client base or investor base in the public markets. So just like from your perspective, how do you juggle this like kind of variability where you want to keep that long-term mindset? You're investing for more growth. You're onto something, it's working, and you're scaling it. And maybe I'm just too much in the weeds on numbers. Maybe people don't mind so much about variability quarter to quarter, but how do you kind of balance this like quarter to quarter measurement period versus the longer term dynamics of what you're building?
Yeah. I think the honest answer is I don't, I personally don't spend a ton of time worrying about quarter to quarter. I'm trying to run the company, even though we're a public company. I think that the capital markets and the industry has been so challenging that I can't do anything about the environment. I don't know when the catalyst event is going to take place. So been way more focused on, let's just make sure that we build a real business that is able to be profitable as a small public company. And so I definitely have more of a long-term view on everything, probably to a detriment, at certain times. Jesse might be able to comment more on that. It's like, I'm definitely more on like, I'm not worried about putting out the press release, talking about nothing to just pump our bags. And like, it doesn't work. It's like you put out a press release and your share price goes down. So the balancing act, I think it's like, okay, we're going to get this money. I think it's like, stay very disciplined on completing the task at hand. Don't go do too many things. In fact, I'm trying to strip us down even further and focus even more so than we even were 45 days ago, because I'm just like, this is a real opportunity for us to like double, triple down on what's working in our business. So let's spend the next year, potentially it takes 2 years, to really lean into that. And, I use this analogy a lot. My team probably hates hearing it, but I'm going to, like, if you know anything about construction, like, you have to get the slab of the house right. And that's what I feel like we've been trying to do for the past handful of years at LEEF. And we knew it's not right. And if you can get the slab, the foundation correct, well, then your walls go up easy. The windows go up easy. Your roof line's going to be straight. You're not going to be off 6 inches at the top end of, and so I think that like, if we can just stay disciplined, build out this farm, stay neurotic on maintaining margins. I can't control top line revenue. The market does what the market does. Oil pricing this year is like down 30% or 20% from where it was last year. I can't control that. But if we can really control our cost of goods and keep working on getting those lower and lower, I think that's the best insurance policy that we can provide to ourselves, and maintaining our gross margin and improve upon it from where it is today. And then we'll have optionality. If we can just get all of that done and we become kind of the largest of what we do, well, now we have this foundation that like we can bolt on whatever we want. And like these ideas that we've kicked around and over the years past around, do we do this and do we do that? There's all these shiny objects that do get thrown at us all the time. And I just, I'm trying to tie this back into your question, but it's just like, if we can get this right and execute over the next 2 to 3 years on the farm and just stay laser focused on almost nothing else but that, I think it's going to open up the doors to all kinds of options for us later down the road. So that's the way I kind of think about it. I'm not worried about, I know Q2 is not going to look great. I know that. I don't care. And if people want to dump the stock because they, the good, we're looking for shareholders, not flippers, so I'm not concerned about these short-term little wins. I want to 10 years out. What does this look like? 20 years out. What does it look like? So that's really the way I think about it.
I love it. Certainly I'm been doing this for 12 years or whatever. Certainly have a, longer term mindset, and it's pretty clear when companies do try to play the quarterly game, but that just is the wrong focus, because that doesn't take you to any longer. And unfortunately, our industry, I think just because it has been challenging, people have gotten too short-minded in how they're operating instead of still keeping that longer term perspective of what are they trying to actually build towards. But to your point, pricing is going to be what it's going to be. I mean, especially in California, I think we have probably more volatility. I know generally the market nationwide is, prices have been coming down, but we just see a lot of volatility regardless, right? It's just because we have these big moments with outdoor and hitting the market and whatever else might be coming into effect if it's companies going out of business, whatever. But how do you think? So I like the idea of focusing on the cost side. So as the company is building and growing, what do you think are some of the metrics to say, like, we're gonna, if we're focusing on the cost side, is it the gross margin profile? I know obviously Q2 is not a great sample set because back to sourcing versus when you get back to just your own supply. But is it I'm just kind of curious, like, how you guys think about it from a cost metrics perspective for nerds like me that like to look at financials.
Yeah. So let me repeat the question just to make sure I have it. So basically what you're looking for is like investors that are following the story, what should they grade us on? And I think that revenue aside, I think that our plan is to complete the farm. And, I don't know exactly how many acres we're going to be able to add on this year versus next year, but it will be something. And, so I'd watch us, I'd hold us accountable to that. Like, did they execute on that or not? Gross margins. I'm telling you guys, I know it, like our gross margins are going to slip in Q2. And then we'll see an improvement again in Q3 and Q4. Execution. There's like so many people I think talk about doing something and then they don't actually ever do it. I feel like we're trying our best to show that we're doing it. We said we were going to do this farm. Took us a long time to get it done, but we did execute on it. It's done. The other thing that, like, just being transparent with people about is that 45 days ago, I didn't know that we were going to get this money. And so we had this plan coming into, coming out of Q4 into Q1 of like, what's the focus of the year going to be? And like, now that we have it, it's like, man, we're shifting our focus a little bit. So New York is one of those things, right? It's like, we were like going to lean pretty hard into New York. And I think it's serendipitous, or it's, what's the saying? Rejection is God's protection, whatever you want to call it. It's like the fact that we're getting this and we are able to go focus the money on California, the timing, it makes a lot of sense for us. New York is going through like a lot of fluctuation right now. And my prediction is that there's going to be some pretty big warbles that go on in New York for the next year or two. So the idea is like, hey, let's just not exit, but like, let's just throttle back and do the bare minimum. Let whatever happens in New York, leave the optionality for us to, really go into it after we've executed in California. But that's going to be the focus, is that we're going to use the majority of this money to double down in California. I believe that we can, I'm not going to put a number to it, but I think that we can meaningfully increase the size of our business just on what we have. Like, I think that there's plenty of market share for us to grow into on our existing business. And I think that once we do that, it's going to open up some opportunities that for us to grow the business even further. So that's what we're going to
do. At the ranch, do you guys grow from seed?
Yeah. All seed production. At least it was in 2025. Later down the road, I could see us, potentially doing clones, but seed production was like, I view it as kind of a bit of an insurance policy. There's a lot of like viroid issues in California running clones. I didn't want to bring that in year one to the farm. So we did all seeds. We outsource a lot of clone, like strain specific clone production to a farming partner that we have in Central California. They do everything that's more like, clones, solventless strains, like things that are like specifically targeted. We basically said, you guys handle all of that. We're going to handle all this kind of meat and potato style cultivation. So yeah, no clones on the farm. And I don't know if that'll ever change, but yeah.
Yeah, no, I was just curious because like we have a company on the hemp side and for industrial purposes, and hundreds of acres. We're seeing a lot of growth this year. And so now we're trying to call up our farming partners because we don't have a huge leaf farm for industrial. And we're saying we need more acreage. And they're like, well, too bad we already bought all the seeds that we have for this year. So that's why I was just kind of curious, but that doesn't seem like that's a challenge for you guys, as you're scaling up the farm more, you already have a seed bank basically, is to be able to just continue to extend your planting. Is that
Yeah.
accurate?
Yeah. We're good on the seed front. No issues there. That's interesting. I'm going to hook you up with some people then. If you're having a hard time sourcing seeds, I'll make a couple introductions that can help you.
Are clones tough too, Micah, from a cost perspective?
Yeah. So, and logistics and, the problems that just come with cutting that many clones. It's impossible. You can't grow this many acres and use clones. It would cost a ton of money. Clones are anywhere from like $3 to $7, depending on who you're getting them from. Cultivating like 5, 10, even 15 acres, 20 acres, you can pull it off with clones. It's a lot of work, but not for distillate. Like for distillate, like you need the cost of goods to be as low as possible. So no greenhouses, just row cropping. And with that is also, the cost of seed. You want it to be as low as possible.
And that's interesting because we used to have a clone company many, many years ago. It was $8 to $12 a clone.
Yeah.
Now it's down to $3 to $7.
Yeah.
So just thinking about the ranch and I'll pass it over to Jesse, but you're just getting up and going. And when you first drove that farm and you're like, this is it. How would you say, like, from that first initial vision and now that you're getting actual, you're pulling out of the ground, how does it match up versus what your expectations were?
It's going to sound, it's happening the way I envisioned it, which is good. It's not without its challenges. I've been growing my whole life, like I said, or in the top of the call, a long time, but I've never done something like this, like something this large. So like, it's been very cool and interesting to watch treating cannabis more as an ag crop versus like a very boutique-y thing, where you're farming in engineered soil, then raised beds and very laborious processes and stuff. So, there's definitely been a lot of learning experiences. We blew up a well, transparently speaking. That was a interesting curveball that was thrown at us mid-year through the year last year. And I'd say that I don't know, the takeaway from it is that like, as long as you have the right team and the SOPs and the practices, the systems are in place, it's totally achievable. I think one of the things that I've been, thrown at me since we started this process is like, oh, what you're doing is impossible. There's no way. It's impossible. Like even when Aaron was doing due diligence on us before he made the investment, that was one of the pieces of feedback that he was getting from someone, was that like, it's impossible. You would need a Costco to dry everything. But people are thinking about it the wrong way. They're thinking about it through the lens of like the indoor facility that they know about, or like creating a smokable flower product. It's not what we're doing. So we get to treat the plant differently and treat the whole process differently. And it is possible. It totally is. It is doable. You just got to have the right team and the right systems in place. So that's been something that I think has been really interesting and cool to observe. And it definitely makes me feel that like right now, 180 acres is massive. But once rescheduling happens, or once interstate commerce or international export is allowed, our 180 acre farm is going to be a freckle. It's going to be a blip. It's going to be the equivalent of a 10,000 square foot Mendocino farm. It's not going to be big enough. So then it's got me, the wheels turning on like, well, what's the next one going to be? Where are we going to go get the 500 acres? And then where are we going to get it? That's where this is going to go. And so I feel like this farm is like a great experience for us. It's a great R&D experiment for us. I think over the next 5 years, we're going to figure out all kinds of ways to be more efficient, to get our costs down, and to like really put systems in place that help with like mechanized harvesting and all that kind of stuff. So yeah, but night and day. night and day from growing a small little farm to what we're doing now. And, but so far so good. It's working.
So let's talk a little bit, Micah. We kind of laid the table in terms of who LEEF is. Morgan did a good job talking about the strength in the second half of last year, and particularly the fourth quarter being so strong, driven by running more and more of that SCR material. You've also talked about, Micah, kind of refocusing after the mindset investment. We haven't really dug into what that mindset investment is. Do you want to talk a little bit about Aaron and the mindset team's investment, and specifically a little bit more what the plans are with that initial tranche that we're getting or have gotten, I guess? Yeah.
Yeah. Mindset, it's like, I feel like we were in the right place at the right time. From what I've learned of Aaron and his kind of investment thesis is that he looks for businesses that maybe are a little beat up and banged up, but that there's like a real business, like an opportunity to where if he can throw some fuel on top of it, it has the opportunity or the chance of exploding. Kind of a funny story. Aaron actually sent one of his guys to come do due diligence on us like a year ago before we started putting out better results, before we had the farm online. And he transparently was just like, man, I didn't get it. Like, I wasn't really a believer in your business. And so the answer was no, he was not interested. And then we were able to revisit the conversation after we put out Q3 and we had built the farm and kind of, did what we said we were going to do. And so he came out, toured the farm with me, spent an entire day. I gave him the whole, I drove him all over the ranch. You can see the ranch behind me in that photo. We went all over those mountains, just trying to talk about the vision and what we were going to do there. He didn't really realize what I was trying to educate him on. Like, he had the same question everyone else had. Why are you guys growing more in California? There's weed all over the place. Why are you guys doing that? And when I explained to him how hard it is for us to find the right amount of material, clean material, that's when I think it kind of clicked for him. And then he looked at the financial performance and, the fact that we were able to double gross margins on like kind of a half-baked quarter, like off of one extraction line. He became, a believer and asked 900 billion questions, which were good. He's still firing them at me almost every day. And they're all good questions. And like, yeah, and so it's been great. It's like we found this, group and this individual who believes in California, believes in like really exploring and figuring out how to get your cost of goods down, be the low cost provider in an industry. And I think he believes that that's us on the concentrate side. And so he, so far he's invested 4.5 million of, what we're hoping is 8. And the majority of that capital is going to go into building the rest of the farm. So we put a bunch of money into the front half of the ranch, the first 65 acres we put a well in. People don't realize how expensive this stuff is. A well in California is almost $1 million. Add the irrigation system on top of it, it's an extra 500 grand. So we will most likely punch another well. So we have redundancy. It's an insurance policy. There's more fencing, cameras, irrigation, fertigation, all these different things that have to go in. That'll get done. It's already happening. I was up there this last few days. We're already breaking ground on it. We will grow some acreage. We found some efficiencies. So back to what I was saying earlier, I think over the next 5 years, 10 years, we're just going to keep finding little ways to get better, cheaper, faster. We found 14 acres within our existing licensed footprint that we kind of missed in year one. And we're getting those licensed. We'll have those planted in the spring, and then we'll plant them again in the fall. And then we'll start to expand into the rest of the acreage in the back. We're not going to do the whole thing this year. I don't know how many more we're going to add. It'll be enough to take out that wobble in Q2 that I'm talking about, like let's get enough material to where that kind of goes away. But I don't think that we should do the entire ranch year one. Did I get it all? Was that?
Yeah, no, I think that's great. And along with that, in that same press release, Micah, we talked about adding a new board member. And as someone we know well from higher exchanges, I think someone Morgan has known a lot longer than both of us, because he is, what do you say, Morgan? Do you say a Buffalonian? Is that the right term?
Buffalonian. Go Bills.
Go Bills. And that is that Jamie Mendola.
Football team?
Yeah.
Oh, yeah. I didn't even know that.
Yeah, they're both from Buffalo, New York. Jamie Mendola is the guy that we're talking about. I know, Micah, that when Jamie's been out to the ranch actually twice. He spent the night with you
Yeah.
and I out there once, and then he came back that same day that we had Aaron out there. And I know he's really excited about helping LEEF, and I think he's a great fit for where we're headed.
Yeah, totally. Yeah, he joined the board, and he's a great addition in the sense that like he has this skill set. He kind of has this polished background. He really understands capital markets, ran a hedge fund, and for me, it's good. It's like as I told you guys, I'm very transparent. I own it. I did not go to school for any of this stuff, and so it's good for me to surround smarter people than myself around the board. So it's great. He's been helpful in like deal structure, and I think that he'll be helpful in the future as we think about like how to bring in capital, when to bring in capital, how to scale the business. So yeah, so now we got 5 board members, and yeah, it's a good ad.
And we talked about expanding Salisbury Canyon Ranch. Again, 1,900 acre ranch, 180 acre land use permit for cannabis, of which we've done the improvements on the first 65. Micah, you've talked about the need long-term for more acreage. Do you think there's potential that land use permit at Salisbury Canyon Ranch could potentially get past 180?
Yeah, something we're working on. No guarantees, but we're working on it. I think that there's an opportunity for us to add something. I don't know how many more acres, but
Yeah.
it's a process. We got to go back to the county, work it out with the county. Most likely apply for a conditional use permit, which is just a process. But yeah, that's the goal. I think that we're going to try and add as many as we can.
And then just on the other side, if we think about cannabis going down this lane here, there's a little, I don't know if you call it a mountain range or a hill right here, and then it dips into another valley over on the other side, Micah. And there we have some optionality on the hemp side. And the hemp side, Mike, is somewhere you can something you can talk about where you have a lot of experience in this. You know, personally, LEEF has a lot of experience through the LEEF Organics line, and it's something that had kind of lost its energy in the space until this fall with the Medicare CBD announcement, which I think is something exciting. And then also, Micah, on the LEEF team, on the LEEF side, we also work with some professional athletes that are excited about LEEF Organics and the opportunities in CBD.
Yeah. Yeah. So I guess to start with cultivation, we applied for a hemp permit in 2024. Had that hemp permit for about a year, and then we let it lapse just because we were like, we don't know if we're going to use this or not. It's easy to go through the hemp permitting process. So unlike the cannabis permitting process, 2-3 weeks and $900, you can get through the process. Our cannabis licenses this year are about $1 million, just to give you guys a sense of like how different it is. But yeah, that's exactly it. So on this East Valley field that we have, we've got, I don't know, call it 100 acres of area that we can grow hemp if it makes sense to do so. And so us, like many other companies, are trying to make sense of this executive order. It was a total curveball. I didn't see it coming. But it's an opportunity that, if it could be something that like could make sense for us. We do have some athletes, we've got a bunch of basketball players that have been shareholders, longtime shareholders in the company. Jimmy Butler's one of them, and recently got hurt. So Jimmy and I are talking a lot about doing something with him and kind of his road to recovery. He's got this documentary that they're shooting right now, and so LEEF is a part of that. And it's monitoring. I saw there was a press release that came out yesterday of another brand that was able to like find a partnership, and they've got a sales and distribution platform to get into it, which is great. It's awesome to see. So we're going to explore some of that, but again, back to focus. I'm not going to, I say we are going to stay disciplined. And if it makes sense and there's a real opportunity and we can build a team around it and almost let that team go run that part of the company, we will do it. And if there's not, and it's just kind of a flash in the pan and it kind of doesn't go anywhere, then we're just going to keep doing what we're doing. We're going to finish the farm and stay the course. So I know that's kind of a vague answer on like which direction are you going with this CBD stuff, but the honest to God answer is I don't know. I mean, I'm looking at this stuff every day, as are you, Jesse. Like we're constantly, trying to figure out what to make sense or what to make of it. But I don't have a definitive like, oh yeah, I know what to do. We're going to go plant 50 acres of hemp, and I don't know yet. We're just going to slow down a little bit and monitor it and try and figure out what the right path is.
Yep. And what other long-term opportunity that we think a lot about, Micah, and I think is one of the kind of call options I think about investors have on the company, is interstate commerce and also export opportunities. Do you want to talk about those, maybe, Micah, starting first with interstate commerce? Just, I'm not going to ask you questions like, when do you think that happens? Because none of us know. If you want to throw something out there, go ahead. But I don't think, I'm not focused so much soon. So not so much focused on that, but how do you see that opportunity for LEEF as the rest of the country does open up?
I think if it happens, it'd be unbelievable. I'm rooting for it. I don't know when, but the goal and the intent of what we're doing is to position ourselves and prepare ourselves for when it does happen. Right now, California, on average, round math, it's $1 a gram for distillate. It's $2, $3, $4, $5 a gram for some of the other concentrates that we sell. Those same concentrates are anywhere from like 3 to 7x in a lot of the other markets domestically. I'm less familiar internationally. One of the things that a report I saw was like Portugal is now buying cannabis material through, I believe it's through import, for like $150 a pound for biomass material for oil, which is crazy. We're growing that same material for $8. So I think that when it does happen, there's going to be a window of time that LEEF is going to be in a very strong position to where we'll have the footprint and the scale to be able to, provide products for a lot of other markets. And I think that pricing will most likely jump dramatically. How long does that last? I don't know. I think a lot of it comes down to what the industry ends up doing with pesticide regulations kind of domestically, and like, do they keep it strict or do they change laws later down the road and make them more like organic standards the same way that they are in your normal agriculture? My hope is, and like what we're kind of pushing for, is we want to keep them strict. I want the cannabis industry to kind of lead the way on cleaning up ag for the rest of the world. But I can't predict that. I don't know the future there. So if they keep them strict, I guess the point I'm trying to make, a lot of the other farming areas, big ag areas where they've been just dumping chemicals and salts and glyphosate and Roundup and all this stuff, they will not work for our industry. That, I know that because we spent 10 years trying to find the right farm in California. It won't work. They're going to have to find pockets like what we found and build different types of supply chains that are similar to what we have. So that's my hope. And then international, and international is another wild card too. It's just like, I almost feel like we might be able to ship internationally prior to being able to ship domestically, which would be totally interesting and crazy. And if the opportunity presents itself, that's what we're going to do.
I'd actually go on that side of the bet for sure.
Yeah.
That we would be open to exporting before interstate.
I heard this crazy rumor, and it's a rumor, but I'll share it on this thing. So I heard that like when Bill Clinton was negotiating NAFTA, I think it was, when he was in office. I don't know if you guys knew this or not, but like one of the things on the alcohol side, we were trading naming rights and different rights when it came to trade agreements. So Mexico got tequila, and we are no longer allowed to grow agave and call it tequila in the United States. I think in that trade, we got gin. We got the short end of the stick on that one. But what I was told was that there's something in there related to cannabis and hemp as well. I could totally have this wrong, and people can call me an idiot, but that one of the things that they were trying to work on was that renegotiate whatever's in that international trading agreement to allow for us to ship internationally. I hope that's the truth, but I heard it from someone who I trust and I think is very, very smart. So I don't know.
It's interesting because hasn't NAFTA been torn up?
I don't know.
Yeah,
no idea. And I might have the wrong trade agreement. It was one of those, something under Clinton.
Yeah. I mean, it's interesting for sure. I would love to learn more about that. I just was saying because I thought President Trump ripped that whole thing up and called it something else. Maybe a lot of it survived in it, but just the name NAFTA, can't call it that.
Yeah, I just want to spread rumors on the Higher Exchanges podcast.
We always like rumors. That's what drives the listens.
Yeah.
But just I think bottom line,
before we jump into the question or a couple of questions, or sorry, Jesse, I didn't mean to, I know you still may have one more, but just to double click for 1 second.
Yeah.
How much is a hemp permit in California?
$900 US.
$900. And is it the same amount of work to get a hemp or a cannabis permit for $1 million?
No. Well, the same amount of work? No, it's a different process. You go through the ag commissioner in Santa Barbara County, and it's easy. You know, they come out and treat it like ag. No different. Like if I wanted to grow carrots or peppers or whatever, it's maybe a little bit more strict than one of those crops. You have to apply for a permit and ask for permission, but no, I mean, and then on the cannabis side, you've got multiple agencies that are involved, and everyone's got to come out and observe and take a look at what you're doing. But the farming, it's the same thing. It's like we're doing the same thing. The field will be laid out the same exact way. The methodologies, the SOPs, everything's identical. It's just way more expensive on the cannabis side.
Yeah. It's just
900 versus $1 million is crazy.
Yeah, and that's annually every year.
Right.
So one of the things I brought up with the DCC when I went and with one of the trade associations that I'm a part of, and just asked like, hey, is there a way for us to have this like every 3 years? You know, like get the cost down a little bit. And the answer was pretty much no.
They didn't jump at that.
No.
Unfortunately, other states are like this too, where it's just an extortion every year.
Yeah.
Just to stay in business, you gotta pay this absurd fee.
Yeah.
But just amazing. I mean, the delta, and people wonder why intoxicating hemp exploded, because it costs nothing to get into it. It's like the costs to entry are fraction, $900 versus $1 million. Yeah. It's crazy.
Yeah.
So anyway, sorry for the sidebar, Jesse. Go ahead.
No, good question. Just one more, Micah, then we'll head towards wrapping this. One thing we're talking about with everyone we had on the show, we talked about with Jason and Ziad from Terracen, we talked about it with Boris a couple of weeks ago, is that everyone is having more M&A conversations. Some are at the small level, putting a couple of stores together. Some are about putting brands together. Boris last week was talking about big M&A, like tier 1 M&A that could bring together 2 of the top 5 names. It wasn't specific, but he was saying that bigger conversations are happening too. Do you want to talk about your perspective or our perspective at LEEF on M&A and the types of things that might be accretive given this new platform that we have?
Sure. Yeah. I mean, we're always having conversations with different groups just to kind of like get a sense of what other people are doing. I think, what Curaleaf is looking at opportunistically, and also challenges that they're probably trying to solve for, are just completely different than the position that LEEF's in. We retired a bunch of debt last year, kind of cleaned up our balance sheet. Our share price is not where I want it to be, as we look at M&A, but we have been having conversations. And so I think that from a timing perspective, I don't know when we will see. I feel like I'm dodging the question, but I'm not. Trying to stay vague. We're having conversations with different people, but I don't know when the right time for us to do something is or is not. I think that there's definitely some brands in California that could benefit from like attaching themselves to our platform as we build out the rest of this farm and we get our cost of goods down to where I believe that we can get them. I think it's advantageous for a brand that's like doing $10 million, but they're break even. You add just throw our cost of concentrates on their brand, and all of a sudden they're cash flow positive, like they're making money with no other changes, no other efficiencies. And so we've ran that exercise a couple different times just to see if like, hey, what would you guys look like if, we were, doing this together. So, but from a timing standpoint, like I said, stay the course, let's stay focused. If we do anything, like it needs to be something that isn't like a gigantic distraction. So there's a couple things that are interesting that are out there. But I think for the most part, it's going to be like, hey, let's just focus on what we're doing. Like I said.
Okay. Morgan, I'm going to take this listener question section real quick. Mariusz, we already got your question. Thank you, my friend. Mariusz was asking about pricing in other markets, and I think you hit that pretty well. Pretty well, Mike. Lots of optionality outside of California. California is one of the lowest cost markets in the world. We're making this work, which we're excited about. And then if we can, find markets where, rather than $1 for distillate, it's $1.50, even $2. I mean, the impact on our business would be massive. So we think there's a lot of optionality there, interstate and export. So thanks for your question there, Mariusz. I think we got that one. And then real quick, Micah, a gentleman named Interested Viewer asked the question, something to the effect of, your extracts contribute to about 50% of products sold in California. Is there room for you to grow? Is there heavy competition? And is there enough demand out there for your products?
Yeah. Short answer is yeah. I think that there's plenty of market share for us to expand into. I think that we can go deeper with some of the existing clients that we have. And although we do work with kind of a lot of the bigger guys, there's a lot of what I would call like the tier 2, 3, and 4 brands that are underneath them that are on, up and coming, that we don't work with. And so that's like one of our focuses this year, is just like working with the guys that, need smaller amounts of material, and we can help them grow their business. Like I said, I don't want to throw a number out to where but like, I really believe that like we can grow this business like 30, 40, maybe even 50% or more in California, and by just leaning into this farm, just in like Q4, back to what I was saying about Q4 is evidence of that. Q4 is typically our softest quarter, and it ended up being our best quarter in 2025. And the reason is because we had the material. We were able to get into a cadence and rhythm with like the amount of output, and then also with our clients as well, to where we're not missing opportunities because we're out of inventory or we didn't have anything at the right spec. And I think that just gets better and better as we continue to, own this bigger supply chain. So yeah, I think California it's a massive opportunity for us. We can definitely keep growing here.
Well, great. Well, why don't we wrap things up, guys? And I want to make sure to say thank you again to FlowHub for making today's show possible. 420 is just 25 days away. It's a perfect time to review your dispensary software. Right now, go see what's possible at flowhub.com. Micah and Morgan, this was fun. I appreciate you guys taking the time. Micah, thanks for coming back and joining us again.
Thanks, guys. I appreciate you getting the message about the black shirts. We all showed up on brand. I like it. Nice work. So yeah, no, thank you. I appreciate that. Thanks for having me on.
And thank you guys all for listening. We appreciate it. Special shout out to everyone that's been listening on YouTube. We've had really good growth in our subscriber base over there. Big jump in listens there. So thank you for everyone that's listening on YouTube. Do us a favor, if you like today's show, if you like any of the shows, hit like, subscribe, drop a comment. All of that helps expand the platform. And we'll see you guys back here again in just about 2 weeks.
See you guys.
The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or a recommendation. All investing involves risk, including the loss of principal.